There's definitely ways to be tax aware when giving tzedakah. For example, you're able to donate stock that's appreciated to a charitable organization. So if you have a mutual fund or a stock that you've owned for a while, rather than pay tax on it and then give it, you can donate the stock directly to the organization. Many shuls and schools have their own brokerage accounts, so the transfer can be made from your account directly to the schools or shuls, for example. Another way to give in a smart way is to set up what's called a donor-advised fund. So family sets up a donor-advised fund. Whenever money is moved to that fund, whether you're moving shares of stock or you're moving cash, you get a deduction immediately. And you could decide later when and to which organization to give it to. The important thing is it's a charitable account. Money that goes into it immediately gets a tax deduction, and you're able to determine when in the future you're able to determine when and to which charity in the future you're going to give it. On a higher level, for someone who has a business sale or a larger gain in a particular year, for some people it makes sense to set up their own private family foundation. It could be in addition to a donor-advised fund or in place of it. But when you set up your own private family foundation, you have a little bit more flexibility as to who the money is going to be given to, and the deduction works the same way. As soon as money is contributed to the foundation, the deduction applies in that year. So both highly advantaged and both worth considering.